Welcome to the deep dive. Today, we're going to be looking at Lowe's third quarter earnings for 2024. We've got their Form 8K straight from the SEC, and we've got the fresh press release. So let's just dive in and see what kind of story these numbers tell us about the home improvement world.
It's more than just Lowe's, though, right? I mean, their performance can really give us some clues about the entire home improvement sector, maybe even hint at some larger economic trends.
Okay, so the big news is a 1.1% dip in comparable sales for this quarter. And this quarter ended November 1st. I mean, that's not a massive plunge, but it's definitely something to pay attention to.
Right, yeah, slow down comparable sales. That usually means that the market is cooling off. It makes you wonder if people are maybe tightening their budgets a little bit,
Yeah.
or maybe they're just putting off those big home projects. It's a potential economic indicator, I think. It's definitely something to watch.
So honey, let's finally redo the kitchen and more. Let's just paint the cabinets and call it a day.
Yeah, maybe. But before we jump to conclusions, let's look at the full picture here. Total sales hit $20.2 billion this quarter, which is actually a bit lower than last year's Q3.
Hmm. Let's talk about earnings per share. Lowe's reported diluted EPS of $2.99, but there's a catch. That includes a one-time gain from selling their Canadian business. For those of us who, don't speak fluent finance, what exactly does diluted EPS even mean?
Well, think of it this way. Diluted EPS is like figuring out the profit per share of stock. But it takes into account all the potential shares that could exist if things like stock options were used. So it kind of gives you a more conservative, I guess you could say realistic view of those earnings.
So it's like looking at the earnings with a what's the worst that could happen
Yeah,
lens.
precisely. And in this case, the adjusted diluted EPS, which takes out that one-time gain, is $2.89.
Okay. Now, Lowe's CEO mentioned a few things that are impacting these results, including softness in DIY, bigger ticket discretionary demand. What's that all about? Is that just a fancy way of saying people aren't splurging on, fancy renovations?
Well, it does seem like folks are getting a little bit more cautious about spending big bucks on home improvement projects that aren't absolutely essential. Like those dream kitchen remodels or the luxurious bathroom upgrades. Those might be the things that are getting put on hold right now as people react to, the economic uncertainty.
Yeah, that makes sense. But it's not all doom and gloom, is it? There were a few bright spots in this report too, right?
Absolutely. Sales to professional contractors, what Lowe's calls the pro segment, actually saw positive comparable sales. So that's encouraging. And also, online sales are up, and those smaller outdoor DIY projects, those are still going strong.
Now, this is where it gets interesting for me. Why are those specific areas doing so well when other parts of the business are slowing down?
Hmm. Well, the strong pro sales could mean that construction activity is still humming along, and contractors are feeling pretty good, confident about the future. Maybe there's just like a backlog of projects, or maybe people are shifting toward more professional grade work instead of DIYing everything.
So instead of tackling that bathroom reno themselves, they're just calling in the pros.
Exactly. And the growth in online sales, well, that just aligns with what we're seeing, across retail.
Mm.
Having a strong online presence is it's crucial these days. And as for those smaller outdoor projects, maybe people are just choosing more affordable ways to spruce up their homes in these, uncertain times. A fresh coat of paint on the patio furniture feels a lot less risky than a full-blown kitchen renovation.
Right, right. Speaking of uncertainty, those hurricanes, Helene and Milton, those must have thrown a real wrench in things, don't you think?
Oh, yeah. Hurricanes are tricky. They can increase demand for building supplies as people, repair damage, but they also disrupt supply chains and store operations.
Yeah.
The press release mentions that they did impact sales, but it's uh, it's tough to say if the impact was overall, positive or negative without more details.
Okay, so let's dig into the nitty-gritty of the data. The 8K filing has some really juicy details. For example, pro sales jumped by a significant amount, like high single-digit growth.
Wow. Yeah, that definitely strengthens the idea that the pro segment is a major growth engine for Lowe's. They're clearly doing something right to attract and keep those, professional customers happy. Could be their product selection or the loyalty programs, maybe even their focus on specialized services for contractors.
And get this, 5 out of their 15 regions actually saw sales growth above the company average. What's going on in those regions? Hidden pockets of DIY fanatics.
That's a great question. What is it that makes those regions different? Are the local economies stronger there? Is there more new construction happening? It'd be fascinating to dig a little deeper and see if see if there are any geographic trends that we can see.
Yeah, like a little economic puzzle within the bigger Lowe's puzzle. Another detail that jumped out at me, the average ticket price was $101.72. Does that tell us anything interesting about how people are shopping at Lowe's?
Well, if we compare that to previous quarters, it could reveal how consumer spending habits are evolving. Is that average ticket creeping up? Is it going down? Are people buying more big ticket items, or are they sticking to smaller purchases? This number could give us a glimpse into, consumer confidence and their willingness to spend on home improvement.
So it's not just about the total sales, it's what people are actually putting in their shopping carts. All right, let's shift gears for a minute and talk about this total home strategy that Lowe's keeps mentioning. What exactly does that mean?
So basically, it's Lowe's master plan to be like the ultimate home destination for everyone, DIYers and professional contractors. They want to provide a complete range of products and services, everything, appliances, tools, design consultations, even installation services all under one roof. Like a true one-stop shop for anything home-related.
And they specifically mentioned ramping up their online business, expanding those installation services, and focusing on localization. Why are those areas so important to them? What does it tell us about their vision for the future of home improvement?
Well, it seems like Lowe's recognizes that they need to meet customers where they are, both online and in specific communities. Beefing up their online presence just makes it easier for people to browse, compare prices, buy, even get support, all without having to leave their couch. And expanding installation services, well, that caters to the people who just want a more hands-off approach, basically saying, we'll take care of the messy part for you. And localization, well, that likely means tailoring what they offer to fit the needs of different regions and communities.
So they're realizing that what works in sunny California might not work in snowy Maine, and vice versa.
Exactly. It's about acknowledging that a one-size-fits-all approach just, doesn't cut it in the home improvement world.
Yeah.
But all of these moves, they really make you wonder, are they actually delivering value to their shareholders? What are they doing with all that money?
That's where their capital allocation comes in, right? This quarter alone, Lowe's repurchased $758 million worth of their own shares, and they paid out $654 million in dividends to shareholders.
Wow, it's a lot of money.
So what does that tell us about their priorities? Are they, hoarding cash? Are they reinvesting it? Are they sharing the wealth?
Well, these actions definitely signal a commitment to giving back to their shareholders. Share buybacks, they can boost the value of the remaining shares, and those dividends provide a direct return on investment. It's a way for Lowe's to share their successes with the people who invested in them.
Speaking of success, what's their outlook for the rest of 2024? Are they feeling, optimistic, or are they bracing for impact?
Well, their updated full-year outlook is it's kind of a mixed bag. They've actually bumped up their total sales projections slightly to between 83 and 83.5 billion dollars. Originally, they were thinking somewhere between 82.7 and 83.2 billion dollars.
Okay, so that actually sounds kind of hopeful considering all the challenges that they've talked about. What's making them so confident?
Well, it could be that they're seeing some positive signs in certain areas that are outweighing the slowdown in those big-ticket DIY sales.
Like what? Give us some examples. What could be giving them that boost?
Well, they might be expecting, continued strong performance from that pro segment, which tends to be less affected by economic swings than DIY spending, or maybe they're banking on their online sales to keep climbing as more and more people shop for home improvement online.
So they're not putting all their eggs in one basket. They're diversifying their bets.
Exactly. They're recognizing the challenges, but they're also highlighting the opportunities. And they've even slightly raised their earnings per share guidance, which suggests that they're pretty confident about managing costs and staying profitable, even if things get tougher economically.
Okay. So a lot of moving pieces in this puzzle. It's not a simple, black and white story. What else do we have to unpack in these financial documents? Let's dive even deeper.
Yeah, sometimes those dense financial tables, they actually hold some hidden gems that can reveal even more about a company's story.
You're speaking my language. What kind of gems are we talking about? Did you unearth anything exciting while you were digging through, Lowe's numbers?
Well, take a look at their consolidated statement of cash flows. I know it might sound a little bit intimidating, but it basically shows us how much cash Lowe's is generating from its core business operations. And for the first 9 months of 2024, they actually raked in a whopping $8.7 billion.
Wow.
That's significantly higher than the $7 billion they brought in during the same period last year.
Okay. I'll admit, I'm not a financial whiz. What does that big pile of cash actually tell us?
It's a sign of a healthy business. Plain and simple. Strong cash flow means they have the resources to invest in new ideas, to pay dividends to their shareholders, to buy back their own stock, and even weather those, economic storms. It gives them flexibility and resilience.
That's good to hear, especially with all this, talk about a potential economic slowdown. It's like having a nice cushion for those just-in-case moments, right?
Exactly. A strong cash position can be a real lifesaver in uncertain times. Now let's shift our focus to the balance sheet, which is basically a snapshot of what Lowe's owns and owes at a specific point in time. Their total assets have grown to $44.7 billion,
Yeah.
up from $42.5 billion last year.
Wow, that's a pretty big jump. What's fueling that growth? Did they go on a shopping spree or something?
Well, if you look closely at the balance sheet, you'll see that a big chunk of that increase comes from their operating lease right-of-use assets.
Operating lease what now? You lost me there.
Right. So sorry about the jargon. Let me break it down. When Lowe's leases a property, like a store or a warehouse, they have the right to use that asset for a certain period of time. And that right is actually considered an asset on their balance sheet, hence the, you know, fancy name.
So basically, Lowe's is leasing more properties, which increases their assets. It's like adding a new car to your garage, except it's a giant warehouse.
Exactly. And this makes sense considering their, expansion plans.
Hmm.
Remember, they're all about reaching more customers and growing their footprint. Leasing new stores, that's a key part of that strategy.
Okay, that makes sense. Anything else interesting on that balance sheet?
Hmm. Well, their long-term debt has actually decreased a bit compared to last year,
Okay.
which is a good sign. It means that they're managing their debt responsibly and not taking on too much risk.
It's like paying down your credit card bill. Always a good feeling. Okay, so what about the income statement? Any interesting nuggets in there?
Yeah, their gross margin, which is basically the profit they make after deducting the cost of goods sold, it remained pretty stable, 33.7% for the quarter. That's a good indicator of, their pricing power and their ability to manage costs. Even when things are getting more expensive, with inflation and all.
So even with rising costs, they're finding ways to kind of maintain their profitability. They're not just, hiking prices like crazy to make
Mm,
up for it.
exactly. And that's definitely something to watch in the coming months. If inflation keeps climbing, can Lowe's keep their prices competitive without squeezing their profit margins?
Yeah, that's the million-dollar question. It brings us back to their total home strategy, their grand plan to be the ultimate home destination. Can you remind us again, what exactly is that all about?
Sure. It's their strategy to appeal to um, both DIY enthusiasts and those professional contractors.
Right.
Offering a wide range of products and services to meet, all sorts of different needs.
And to make this strategy a reality, they're investing in some specific areas, right?
Yes, exactly. They highlighted three key initiatives in their press release: accelerating their online business, expanding those installation services, and focusing on localization. These are all interconnected, and they're aimed at creating a better customer experience and just making Lowe's more competitive overall.
So let's break this down a bit. Why is it so crucial for them to ramp up their online business? Is it really that big of a deal?
Well, in today's world, in today's digital world, customers expect a smooth and easy online experience. They want to be able to, research products, compare prices, read reviews, and make purchases, all without any hassle.
So if their website is, clunky or confusing, people are just going to go somewhere else.
Exactly. By investing in their website, their mobile app, their online ordering and delivery systems,
Hmm.
they can attract, a wider range of customers and compete more effectively with those, online giants like Amazon.
Okay. And what about, those installation services? Why are they putting so much emphasis on that?
I think it's all about, convenience and just meeting those, ever-evolving customer expectations. Not everyone wants to or even can tackle those complex home improvement projects themselves.
Especially those, big ticket items that we were talking about earlier. It's one thing to assemble a bookshelf yourself, but it's quite another to, install a new dishwasher or remodel a bathroom.
Right, exactly. By offering professional installation services for things like appliances or flooring or even full kitchen remodels, Lowe's is making it easier for customers to just, get those jobs done. without all the stress and hassle.
So they're catering to a segment of customers who basically just want to say, here's the plan, you handle it, and then just, sit back and relax.
You got it. And this taps into, a growing trend. People want to outsource those tasks and simplify their lives. Time is precious these days.
Right, right. Okay, now what about this localization thing? What does that even mean in the world of home improvement?
So it's all about recognizing that, what customers need and want, it varies depending on where they live. What flies off the shelves in Arizona might not be so popular in Vermont.
So one size fits all approach just, it doesn't work in this market.
Exactly. By focusing on, localization, Lowe's can tailor their products, their services, even their marketing messages to better resonate with, specific communities and regions.
So they're taking into account things like climate differences, local housing styles, even cultural preferences. It's like being a home improvement chameleon, adapting to each environment.
Yes. So, for example, in areas with harsh winters, they might, stock up on snow blowers and winterizing supplies. In regions with scorching summers, they might focus more on, outdoor living products and those energy-efficient cooling solutions.
Hmm. That's a really smart approach. It shows that they're really putting in the effort to understand their customers' specific needs. But how do they actually put this localization idea into practice?
Well, it involves, a mix of data analysis, market research, and close collaboration with their local store teams. They might use data to see what's selling well in different regions. They could conduct surveys to understand customer preferences, and even work with, local contractors and vendors to offer, unique products and services.
So it's not just about slapping a different label on the same product. It's about creating a truly localized experience that really resonates with each community.
Exactly. It's about making customers feel like Lowe's understands their needs and is there to help them, create the home of their dreams no matter where they live.
It sounds like Lowe's is going all in on, adapting to this changing retail landscape and meeting those evolving customer expectations. But let's be real, they can't control everything, right? The economy it's a big wild card. How much can they actually influence their own success when there are so many external factors at play?
Yeah, that's the big question, isn't it? I mean, no business operates in a vacuum. So how does Lowe's performance actually, fit into the bigger picture of the economy and, the home improvement market as a whole?
Yeah, give us the big picture view. What's the story here?
Well, the home improvement market, I think it's safe to say, seems to be at a bit of a crossroads.
Yeah.
After that huge surge in demand that we saw during the pandemic, things are definitely cooling off. Rising interest rates and inflation are making people think twice before they spend,
Yeah.
especially on those big ticket non-essential items.
So like we were talking about earlier, those dream kitchen and bathroom remodels might be on hold for a while.
Yeah, possibly. At least for some folks. But remember those strong pro segment sales? That tells us that there's still plenty of activity happening in new construction and those larger scale renovation projects. So it's not like the market is collapsing. It's more like it's shifting gears.
So different parts of the market are reacting differently to these, economic pressures. What does that mean for companies like Lowe's? How do they navigate these choppy waters?
Well, they have to be nimble and adaptable. Lowe's total home strategy, focusing on both DIYers and professionals, growing their online presence and tailoring their offerings to local markets. Those are all smart moves, in my opinion. They're trying to position themselves to capture demand wherever they can find it.
But they're not the only game in town, right? Competition in home improvement it's pretty fierce.
Oh, absolutely. They got Home Depot breathing down their neck. And then you've got this growing army of online retailers and specialty stores that are all vying for a piece of the pie. Lowe's really needs to stand out from the crowd and give customers a compelling reason to choose them.
So what could that be? What's their secret weapon in this competitive battle?
Well, this total home strategy, it really could be the key to their success. If they can truly become that one-stop shop for everything home-related, seamless online and offline experiences, expert advice, reliable installation services, that kind of thing, I think that could give them a real edge.
So it's like they're trying to create this whole ecosystem for, everything related to your home. It's ambitious. But let's be real, the economy is still, kind of a wild card here.
Yeah.
How much control do they actually have over their own destiny when there's so many, external factors swirling around?
That's the million-dollar question, isn't it? No business is immune to economic ups and downs. But the companies that tend to, tend to fare best are the ones who have strong financials, flexible strategies, and just a deep understanding of what their customers want.
So are you feeling, bullish or bearish on Lowe's prospects? Give us your honest assessment.
I'd say I'm cautiously optimistic.
Mm.
There are definitely some challenges, no doubt, but it seems like they're taking the right steps to address them head on. Focusing on the pro segment, growing online sales, and that localization strategy, those are all smart moves in my book. Plus, their financials are solid, and they're clearly committed to rewarding their shareholders. I think those are all good signs.
So wait and see approach for now.
Well, I think they all are when it comes to, predicting the future, right? But this deep dive into their earnings report has definitely given us some valuable insights into, where they stand today and what direction they're heading. Now it's really just up to them to execute those plans and navigate whatever uncertainties come their way.
You mentioned consumer psychology earlier. I'm curious, how does that play into all of this?
Oh, it's huge. When people are feeling uncertain about the economy, they tend to pull back on their spending,
Okay.
especially on, things that they don't absolutely need. That's why we're seeing that softening in those big ticket DIY purchases.
So fear and uncertainty can really ripple through entire industries, not just the stock market.
Exactly. And it's not even just about dollars and cents. It's about emotions and perceptions.
Yeah.
Even if someone can technically afford, that fancy new kitchen, they might put it off if they're feeling anxious about the future.
So Lowe's and really the whole home improvement industry needs to find ways to boost consumer confidence. It's not just about selling products; it's about addressing those deeper emotional needs.
That's a great point. It's about creating a sense of trust, security, and even excitement, I think, around the idea of home improvement. People need to feel good about investing in their homes, even when times are uncertain.
That makes me think, what if Lowe's took their total home idea even further? What if they positioned themselves not just as a place to buy stuff, but as a source of resilience and peace of mind in these uncertain times?
Wow, that's a brilliant idea. If they could really tap into that deeper human need for security and stability
Hmm.
and connect home improvement to the idea of creating a sanctuary from all the chaos in the world, I mean, that could be a really powerful message.
It's like taking those basic human needs and applying them to the home improvement market. Instead of just selling a hammer, you're selling peace of mind.
Exactly. They could move beyond just the functional aspects of home improvement and tap into those higher level needs for safety, belonging, and even self-actualization.
Hmm.
It's about creating a sense of home as a refuge, a place where you feel secure and in control, no matter what's happening outside.
Definitely some food for thought. Well, I think we've covered a lot of ground today. We went from the nitty-gritty financials to the big picture implications of Lowe's performance.
It's been a fascinating deep dive. I hope our listener has a much clearer picture of Lowe's, the home improvement industry, and all those economic forces at play.
As always, we encourage you to check out the source documents yourself. All the links are in the show notes, and be sure to join us for our next deep dive, where we'll tackle another intriguing topic. Until then, happy learning.
Happy learning.